Tesla is in a mess. Today, we're diving into a major financial shakeup that could have serious consequences for Tesla stock. China's retaliatory tariffs are creating turmoil, and the impact on Tesla's stock price is something investors can't afford to ignore. We're talking about potential market volatility, investor panic, and a possible sell-off that could shake up the entire financial landscape. So buckle up, because we're breaking down exactly how serious this situation is for Tesla's stock and what it could mean for the future of its valuation. All right, first things first, let's break down these tariffs. These aren't just minor economic policies. They are aggressive financial moves by China, directly targeting American industries. Unfortunately for Tesla, its stock value is caught right in the middle of this battle. This all stems from the ongoing trade war between the U.S. and China, a relentless back and forth of tariffs and restrictions. These latest tariffs are China's way of signaling that they're ready to fight back. Why does this matter for Tesla investors? Because what happens in this trade war has a ripple effect on global markets, especially for companies like Tesla, whose financial health is tied to international trade. If these tariffs drive up costs, investors might start selling off shares, leading to a decline in stock prices. Tesla has already been facing headwinds in the market, and these new trade restrictions could add even more uncertainty to the mix. The potential for a drop in Tesla's valuation is real, and the market is watching closely. To understand the full impact, let's talk about just how crucial China is to Tesla's financial success. China isn't just another sales market, it's one of Tesla's most profitable territories. In 2024 alone, Tesla generated over $20 billion in revenue from China, accounting for a significant share of its global financial performance. That kind of reliance makes Tesla's stock price highly sensitive to any disruptions in the region. It's not just about revenue. Tesla has invested billions into its Gigafactory in Shanghai, which plays a key role in its global financial strategy. This factory isn't just for local sales, it's also an export hub supplying cars to Europe and other key markets. If these new tariffs disrupt Tesla's operations in China, the company could experience delays, higher costs, and reduced profitability, all of which could send its stock price tumbling. Wall Street doesn't like uncertainty, and any hiccups in China could cause investors to pull back, driving down Tesla's market cap. Now, let's address the big concern: Tesla's stock price itself. These tariffs could create significant downward pressure on Tesla shares. Why? Because they introduce higher costs for production and exports, which could eat into Tesla's profit margins. Investors are already wary of Tesla's aggressive expansion plans, and if margins get squeezed further, we could see a major sell-off. At the same time, Tesla is facing increased competition in China from domestic companies like BYD and Nio. These companies are gaining investor confidence and market share, putting even more pressure on Tesla's financial outlook. And with these tariffs in play, Tesla's stockholders have to consider whether the company can maintain its dominance or if the increased costs will erode its competitive edge. If investors start doubting Tesla's ability to sustain its growth, the stock could take a significant hit. Here's something that many investors overlook. Tesla is deeply dependent on China for its supply chain, especially when it comes to battery production. China dominates the global battery market, controlling the supply of essential materials like lithium, cobalt, and rare earth metals. These are critical for Tesla's business, and now they're subject to China's retaliatory tariffs. This means Tesla could see an increase in production costs, leading to financial strain. Even if Tesla tries to shift its supply chain to other regions, the process would be costly and time-consuming, adding more volatility to its stock. Any disruptions in battery supply could also lead to production delays, which Wall Street never reacts well to. If investors see delays affecting delivery numbers, Tesla's stock price could spiral downward, further compounding the company's financial challenges. Let's take a quick pause. If you have enjoyed the video so far, could we ask for a quick and simple favor? Hitting the like button will help push this video out to a broader audience, and sharing your thoughts below in the comments section will make an even greater impact. Finally, don't forget to subscribe to stay updated on the latest developments in the stock market. Thanks for watching, and now let's continue. You know what they say, one company's loss is another's gain. In this case, Tesla's stock slump has opened up opportunities for its competitors and market rivals. With Tesla's stock taking a hit, investors are looking for alternative options, and some are shifting their focus to Chinese EV stocks, which are being bolstered by government incentives and subsidies. The Chinese government's increasing support for local EV companies makes them a more attractive bet for investors, further exacerbating Tesla's challenges. Let's not forget China's recent restrictions on Tesla vehicles in certain sectors, adding to investor uncertainty. With these developments, market sentiment around Tesla is shifting. The stock's once unshakable dominance in the EV space is now under threat, and this perception is critical for institutional investors and retail traders alike. When confidence wavers, stock prices tend to follow suit, and Tesla is experiencing just that. The broader implications of this market shift could reshape the stock's trajectory for months to come. Remember that massive Gigafactory in Shanghai we talked about? Well, it's not just a production hub, it's a key factor in Tesla's stock valuation. Investors have long viewed Tesla's expansion in China as a pillar of its growth strategy. But with these trade tensions and tariffs looming, that pillar is starting to look unstable. Increased scrutiny from regulators, potential operational restrictions, and geopolitical risks all weigh heavily on investor sentiment. If China decides to ramp up restrictions or impose further penalties, it could deal another major blow to Tesla's stock. Now, some might wonder, could Tesla shift its operations elsewhere to reduce risk? The reality is, moving production isn't just a logistical challenge, it's a financial one too. Building a new Gigafactory takes years and billions of dollars in investment, and there's no guarantee another location could match China's efficiency. This lack of flexibility adds another layer of concern for investors who are analyzing Tesla's long-term viability. The Shanghai Gigafactory is both a key strength and a major vulnerability, and Wall Street is watching closely. It's not just long-term investors paying attention. Tesla's stock has always been known for its extreme volatility, and these tariffs have only added fuel to the fire. The uncertainty surrounding Tesla's position in China is causing sharp swings in the stock, making it harder for traders and institutional investors to gauge its future value. Any disruption to sales or operations in China is going to impact Tesla's bottom line, and the market knows it. Tesla's revenue figures and future growth potential have been factored into its stock price for years. But if those numbers start showing signs of weakness due to tariffs, supply chain disruptions, or a decline in Chinese market share, investors are likely to react quickly. A significant stock price drop could be on the horizon if these concerns continue to mount. The long-term impact, it could make it more challenging for Tesla to secure funding, develop new innovations, or expand into emerging markets. Simply put, these tariffs aren't just a temporary roadblock. They could fundamentally reshape Tesla's stock performance and market outlook for the foreseeable future. So yeah, Wall Street's watching this whole situation very, very, very closely. And depending on how things play out, it could be a bumpy ride for Tesla and its investors. Knowing Tesla, they're not just going to sit back and take this lying down. This company's known for its bold moves and innovative thinking, so it's anyone's guess what tricks Elon Musk has up his sleeve. Adding to the turmoil, Tesla is also facing backlash over Musk's recent endorsement of Trump, which has sparked protests and divided public opinion. While some investors see this as a non-issue, others worry about the potential impact on Tesla's brand image, particularly among environmentally conscious consumers. The protests and social media debates surrounding this endorsement are further fueling uncertainty, making it an even trickier time for Tesla to navigate. One option is to reassure investors by announcing aggressive stock buybacks or strategic cost-cutting measures to protect profit margins. Tesla could also ramp up its efforts to boost investor confidence through new product announcements or major expansion plans. Another possibility is doubling down on diversifying its revenue streams. Tesla has been eyeing AI, energy, and autonomous technology for a while, and this stock slump might just accelerate those plans to reduce reliance on vehicle sales alone. And let's not forget the power of perception. Musk has a history of using social media and public appearances to rally investor sentiment. Whether it's teasing new innovations, announcing strategic partnerships, or making bold predictions, Tesla could attempt to shift the market narrative in its favor. Whatever they decide, one thing's for sure: Tesla's in for a fight. This is a critical moment for the company, and how they respond will have major implications for their stock performance and overall market standing. Investors will be watching closely, and any misstep could send the stock tumbling further. So there you have it, the high-stakes showdown between Tesla and its stock volatility. It's a complex issue with no easy answers, and the outcome is far from certain. One thing's for sure, though: this situation highlights the growing influence of macroeconomic factors on Tesla's valuation and the challenges of maintaining investor confidence in an unpredictable market. What do you think Tesla's next move should be? Let me know in the comments down below. And as always, make sure to like, subscribe, and hit that notification bell to stay updated on all things stock market and finance. See you in the next video.